Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is packed with two Black Star events that will have traders glued to their screens. But before we get started, let me tell you about our limited edition branded mug giveaway. All you have to do is like this video and answer the following question in the comments. What does technical analysis look at? Is it a hardware used for trading? B. Money in circulation? Or C. Past price movement? Make sure you're subscribed to our channel for a chance to win. We'll be announcing the winner once we reach 300 subscribers. T's and C's apply. Now let's talk about those Black Star events. Market participants will be solely focused on the advanced GDP figures, unemployment claims and pending home sales, in order to gain additional clarity on the potential future of the US monetary policy. All of which will be released at 14:30 South African Standard Time.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar is under pressure after a US slowdown was confirmed with orders for core capital goods falling more than expected in March. Meanwhile, Europe's resilient economy is strengthening the euro, which is hovering near a one-year high against the dollar. The risk-sensitive Aussie is struggling to stay above the key 66-cent mark, while leading cryptocurrency Bitcoin found its footing around $29,400 following wild swings in the previous session. The yen is in a holding pattern as the Bank of Japan begins a two-day policy meeting, the first under their new governor. Moving on to today's analysis, let's take a look at Euro USD. The fiber is currently just under that primary resistance level. If we remain below this level and close below 1.1035, we could see a decline back down to 1.1. Should we, however, get a close above the resistance at 1.108, we could potentially see this currency pair rally all the way back up to 1.115. Now, let's shift our focus to Wall Street. US stock futures had a mixed session among major benchmark averages. First Republic Bank tanked 30% after reporting a 40% drop in deposits over the first quarter. However, in extended deals, Meta Platforms surged 11.7% after reporting Q1 earnings per share of $2.20 versus $2.02 on revenues of $28.65 billion versus $27.61 billion expected. The Dow Jones dropped 0.7%, the S&P 500 lost 0.4%, while the Nasdaq added 0.5%. Let's take a closer look at the Dow Jones analysis. US 30 is currently trading inside that support zone. So, should we get a close above 33,400, we could see a rally all the way back up to the next resistance level. A break below the support and a close below 33,280 could trigger a sell-off all the way back down to the previous low point at 32,700. Moving on to commodities, steep losses over the past two sessions saw oil prices erase all gains made on the back of a surprise production cut by the Organization of Petroleum Exporting Countries. US crude oil prices settled lower as ongoing worries about slowing economic growth continued to cloud the outlook for oil demand, overshadowing data showing a much larger than expected drop in weekly crude inventories. Inventories of US crude fell by 5.1 million barrels for the week, following a 4.6 M barrel draw in the prior week and below the expected 1.5 M barrel decrease. Now let's take a look at the analysis on crude oil for today. The momentum has truly shifted to bearish, so should we get a close below $74 a barrel, we could experience a further sell-off on this specific commodity today. Lastly, let's finish things off with gold. The yellow metal is keeping to a small range as traders hunker down ahead of hotly watched data on US economic growth and the Federal Reserve's preferred inflation gauge, although high safe haven demand kept the yellow metal near key levels. Focus is now chiefly on US first quarter GDP data due later in the day, which is expected to show that growth cooled after a stronger than expected fourth quarter. High interest rates, elevated inflation, and slowing manufacturing activity are expected to have taken a toll on the economy over the past 3 months. Looking at the analysis for gold today, the yellow metal is seemingly finding a tremendous amount of resistance at that 2000 level. Should we get a close below 1997, we could see a decline back down to the support that 1992. Should we, however, finally break through this level and get a close above 2002, we could experience a rally all the way back up to 2010.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.